In today's video, we're going to take a look at which sectors are powering this S&P rally that we've seen ever since November began. Now, this was the last video that I made 2 days ago, so this was October 31st, in which we looked at two things. The first was the seasonal tendency of the S&P 500, where November is a strong month. In fact, it was the third strongest month out of all 12 months in the year. So we expect to see buyers in the month of November using seasonal analysis. However, when we looked at the sector analysis, and I know this is a little hard to see, but the key takeaway here is just how many red labels we had. Only two sectors, XLP and XLU, were showing any kind of strength 2 days ago. And we said that we would need to see more participation in order for the S&P to get going. Now that was right here if you take a look, and 2 days since we've just had some pretty strong bullish candles. Well, in fact, we've also gotten a lot more sector participation. Last time, all we had was XLU and XLP. Now joining the ranks, we have XLF, we have XLY, consumer discretionary, financials, we have communications, we have XLB, materials, we have XLRE, real estate, and we have retail. So we see a lot more participation that's helping fuel the strength inside of the S&P. Now, if we come from a daily time frame to maybe something like a 4-hour time frame, we can start to see the two green labels where there's a little bit more strength, and it's as we would expect. The two sectors that were green 2 days ago, or rather yellow, are now turning to green. So we're seeing continued strength in utilities and consumer staples. The remaining sectors are now transitioning from what we saw, which was red, deceleration, to now switching to a stage of accumulation. And for those wondering where these stages come from, that's simply just the market pulse indicator. So if I load this on and we come into a chart of, say, XLP, you should notice that this market pulse line is green, and that's where all of these labels are powered from. It tells us what is the trend currently on whatever time frame chart you're looking at. So 4-hour, we can see the two sectors that we expected to see strong being the strong ones. What happens if we get even narrower, maybe the 1-hour time frame chart? Now we see a lot more sector participation, and that 1-hour chart would make a lot of sense given the rally that we've seen over the past few days. We've had gap up after gap up inside of the S&P 500, which would make sense why you see a lot of sector participation. So now in terms of next steps, we're waiting for price action to really calm down here just a little bit inside of the S&P 500. Maybe fill a gap or two where we're not buying on this massive momentum up. We already know that we have a long side bias in the S&P based off of seasonal patterns from the month of November. We were waiting for sectors to start to participate, and now we do see sectors starting to participate, so we're still towards the early stage of this transition to play the November seasonality. So any weakness, I think, is an opportunity to try and build up the position that you're looking to play based off of the seasonal tendencies. And with Apple's earnings, with the gap down, that might just give us that first opportunity for some sort of a pullback tomorrow inside of the broader markets. Apple's currently at 171.50 as of making this video, meaning it'll open somewhere down here, and that gives us, I think, a much nicer opportunity than buying in this massive move up with momentum essentially charging you a premium for what you pay for the S&P 500. Alright, I hope you found this video helpful as an update to see how the sectors very quickly transition. This was less than 2 days worth of work from a stage of deceleration to now we can see much more sector participation, and you can see exactly where that money is flowing in and which sectors are still sitting out of this overall strength that we expect. Take care, everyone. Good luck trading, and I'll see you in our next update.